Optimism in the HECM industry, diversification, and uncertainty.
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome back. Despite political and social unrest and also economic uncertainty, reverse mortgage lenders are expressing optimism in both the program's viability and growth. Additionally, some have announced to further diversify and grow their forward or traditional mortgage originations. In the next 3 minutes, we're going to be examining the forces behind our industry's optimism, the possible motivations for increasing traditional or forward lending, and also the uncertainty that surrounds the U.S. economy in 2021. Now, one of our commenters on HECM World said this in December, speaking of industry optimism. While 2021 may be the calendar year that ends the COVID-19 pandemic, this fiscal year is starting out to be a year of mixed messages, optimism in the face of humbling fact, and troubling issues facing our industry. No matter what one's experience or knowledge may be in these times, we need to be flexible and improvise whenever necessary. Now that came from the Positive Realist, and that's a very fitting comment considering the pseudonym used. Our industry's lenders have been manifesting their optimism by stepping up and effectuating significant changes in their technology, sales processes, and also modifying their sales and loan offerings to reach out to a larger pool of eligible borrowers. And those include those under the age of 60 and 62. Despite the national stay-at-home directives and strict regional lockdowns, HECM loan applications climbed significantly in 2020, up month over month throughout the summer and fall. It's a testament to both the growing financial uncertainty amongst the senior homeowner and the rapid adaptation to remote sales by HECM lenders. Today, more reverse mortgage dominant lenders have been embracing the traditional or forward mortgage, and some of that can actually be attributed to their existing parent company's established traditional mortgage operations that have been in place for several years. And reflecting on the existing division of forward and reverse lending, Liberty Reverse Mortgage President Michael Kent told Reverse Mortgage Daily, "We know what the opportunity is in the forward space, and one of our continued efforts in 2021 will be to find ways to tap into that. You know, we have customers that are doing a 30-year fixed rate forward loan, and they're over 60 years old. And believe me, we have customers who do it that have LTVs that would qualify for a reverse mortgage." Launching a traditional lending division or expanding its footprint is not necessarily a new phenomenon. In fact, in early 2018, American Advisors Group announced the opening of a new traditional mortgage office with up to 70 to 80 loan officers in Sacramento, California. Then there's Fairway Independent Mortgage, the sponsor of this very show. They have a long-established and successful traditional lending operation, one that brings particular opportunities to place reverse mortgages on a more even playing field. "I want to ensure reverses are giving a fair audience and that they're properly sold and properly explained. That they're used when they should be used, because there's a few too many forward mortgages that are done because people are just used to doing them." That said Harlan Acola, the reverse mortgage director at Fairway Independent Mortgage. Now Acola added this: "If somebody is a veteran, we certainly want to talk to them about a VA loan. If somebody is a first-time home buyer, we want to talk to them about a first-time home buyer program. So if somebody's over 62, why don't we want to talk to them about a reverse mortgage option? Even if they don't go with it, they should know about it." And speaking of uncertainty, our present and future economic uncertainty is undeniable as millions of additional jobless claims are being filed, and many of those are going to be for older workers who now find themselves facing the reality of involuntary retirement. In their newsletter, Deloitte writes, "Vaccine development is undeniably good news for consumers and businesses, but the damage to the economy from shutdowns and withheld aid has already been done. The coming months will show the extent and suggest the direction of the recovery. Assessing that damage to the U.S. economy may take time, and it's expected we may face a double-dip recession. The Federal Reserve's printing presses are working overtime, and that has dramatically cut interest rates. That is likely to prop up today's inflated real estate market. That is, until the Fed decides to unwind their balance sheets and contracts the money supply. But nevertheless, despite these challenges and the uncertainty, the resiliency of reverse mortgage lenders and originators like you is undeniable. Proof that the phrase improvise, adapt, and overcome is most certainly not a cliche, but is how business is being done. Now, what are your thoughts? Leave your comments in the comment section below. And if you enjoy watching these videos, please subscribe to our YouTube channel. You can also share this video with others using the social media links found on this page. Thanks for joining us and have a great week.